Good morning, everybody. It is the 22nd of March, 2018, and we are one day post, well, almost a whole day, but not really. 1 p.m. will be a whole day past the Fed decision to raise interest rates, followed by what we just had news here was the Bank of England interest rate decision, and it's unchanged. They are not. Let me make sure I got this right. But I want to make sure. Leaves the interest rate on hold. So we have that going on. So there's no interest rate increase versus the dollar that is getting an increase. So, right, okay. Anyways, I wanted to show you something. This is not TradingView, okay? And I try not to use any of the other software that I utilize, like Motive Wave. And just a second. Boop, 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 boop. Just don't want my oh, is that currently in use? What? Oh, wait a minute. Really? I already have it up. Cool. Never mind. Okay. Now, what we have is on the pound. Now, I've been talking about being short the pound for a while because we have this. This is Optima by Market Analyst. It's probably the most complete suite of Gann software that you could come across. It's phenomenal. It's amazing, and it's just fascinating. It's expensive as hell, but I love it. I pay for it because I use it. Now, this is Gann's square of 9. Okay. Looks kind of esoteric. He also has the wheel. This is and the hexagon, and he has some others, a square of 4 as well. But the square of 9 is probably what is the most well known out of all of his tools, and I believe the wheel is called the universal clock, but the square of 9 is probably what is used the most. Now, Optima has put the ability to auto paint the price levels with the corresponding degrees and the dates. So what I'm looking at here is, if you see this construction on the screen, this is just the square of 144. It's the same thing that we draw on other charts. All right, but notice the date here. Okay, this is a you know what? I need to make sure I know what. I think that's a 270 degree angle. Let me make sure. Yep, 270 degrees. Okay. That also falls right on a Gann square, beginning and end, which is where we're at. And we are at these excessive overbought levels on the composite index and on the RSI. So, I mean, these things are the same as they are on our charts. This is the daily. Additionally, we have a 90-degree price level of 142.6, which is price kind of went up there a little bit, but then got halted and traded down. So what this tells me is to be bearish. I've been looking at this being bearish for the last week or so, just because I know we were coming up to this date. It's hard to determine how far something travels up or down, but you can have a bias of which direction it will go after this. So we're looking at a bearish bias moving forward. We can also look at other instruments like the UJ. Similar scenario here. We have this continuing. Now this is almost like cheating, I guess, is that this software will paint the divergences in the composite index and price automatically. which is kind of cool. I haven't found it to be as accurate as, you know, an independent analyst or trader doing it themselves, but it is still kind of gives you a little bit of a heads up. Now, as I'm looking at UJ here, I see that we are, you know, we're past kind of a pivot in time here and in price. We had like a 90-degree area, which is supposed to trigger a reversal zone. So that is actually still in play. And then we have right here the 270-degree level at 105.58, which we're currently trading below. Now there's going to be some hiccup regarding whether or not we're going to find this reversal here, because I'm very long on the UJ over the last couple of weeks, because we are severely oversold on weekly conditions. And notice that we have on the daily, we just have this long drawn out divergence. Like we have a divergence going from 113 in January, 113.06 in January, all the way to now. So these things do not last long. All right. Even though this is the daily, this is still an adequate amount of time for it to kind of continue down this length. But there's going to be a pretty violent snapback into value. So we should be excited about that. So what we have ended already, we have the Fed news has come out, and then we've had the pound sterling news come out. Now, how do things usually generally react to this? We know that news causes a big amount of shifts and changes and a lot of whipsaws in the market. Okay? And we know that the moves after the news sometimes are not honest, sometimes they're not correct, and sometimes they take a little bit to get into equilibrium. So, you know, I know that some prop shops, they say you cannot trade after a major news event like the FOMC or the Bank of England's speech. Like, you can't trade for an hour to two after that. Now, in the past, the behavior of a lot of these markets is that when there's major news releases like that, we sometimes will not get a full reversion to the mean and the honest move for up to 8 to 24 hours after that news release. So a lot of the activity that travels in one direction over that time period is sometimes not to be trusted. Okay? So we just have to be aware of that. And that's, you know, we're looking at the pound right now. You know, there is some bias for being bullish, but as I'm looking at the I need to save. I'll do that later. As we're looking at this chart here, and this is another piece of software called Motive Wave. I use it mainly because I use the Hurst Cycles. And actually, I'll go into Hurst Cycles today because, you know, we've got a lot of new stuff going on. And you know, we can learn how to manually put them on a screen, as well as, you know, letting software do it. This is another piece of software. Motive Wave is significantly less expensive than Optima's software. It does not have as much Gann tools, but it still has a lot of tools nonetheless. I think what a lot of folks would really like about it is the ability to do this. And I'm going to stress that this is dangerous to do and trust it. You should really only use this kind of stuff as a confirmation or as like another viewpoint of your own. So at the risk of saying that, I'm a little lax about even showing you this, but One thing that motive wave does that is just phenomenal is, let's bring this down to the daily, is it will, you can highlight a selected range of an area and it will auto plot Elliott waves. Okay, see that 1, 2, and then 3, 4. Okay, you know, we can also bring it to a weekly. Oh, that's the auto Gartley. So Elliott wave, talking about this corrective wave, A, B, C is what it says is the next move. Possibly, you know, we'll have to see. That's one benefit. The other one is that I kind of showed you that by accident. It is the auto Gartley, except you've got to kind of get the right. There we go. All right. Although that one doesn't really work because we're way beyond that. Way beyond that. We got to probably bring it down to the daily to get a better view of this. Let's see. Maybe it doesn't like that. Or, yeah, what do we got going on? Probably one right here. Yep. So this is telling us that we have a bearish shark pattern forming on the daily. Okay. Anyways. Looking at our charts. And let's take a peek. Let's bring up trading view. And let's go to our Ichimoku. And let's look at these markets. Okay, yesterday, big moves. Today's a day where we might not want to be looking to take trades either until, you know, probably maybe later on in the afternoon or in the morning. Certainly maybe we want to wait till, you know, about the time, you know, I'm about to sign off here with you around 8:30, 9 o'clock. We'll see. I might hang around a little longer than usual. But let's look at the dollar index. Dollar index yesterday, boom, shot down huge. Now, why did it shoot down even though the rate hikes are there? No, nobody knows. There's all sorts of reasons why. Really, this could just be a fake out. This just could be a bear trap. And you know, some people think, well, bear traps, bull traps, hasn't that gone on too long for that? No. Bear traps and bull traps can be set in periods of minutes, days, hours, weeks. You know, they can be extended for quite some time. So looking at this, the dollar index, we're in a very consolidative zone as we look at the hourly. You know, we're inside the 8, but we're below the 1 and the 4. But you know, we're just still kind of hovering within this value area. We found a lot of support right down here. Gold. Now, gold shot up yesterday massively, like over 2% of a move, I think. And then we got to the top of this 8-hour cloud, and what happened? We faced some resistance. Now, again, looking at this 8-hour cloud, the blue blob here, like I said, when we have thick clouds and we have a flat top, that is a sign of strength of the resistance area. It means we have a strong resistance band here and that it's going to be hard for price to trade above it. Okay? Now, as we take a peek at the euro, what did the euro do yesterday? Traded up on that news heavily, but then we've just had really a kind of a strong dive down. And it's tempting to retrace a little bit, but you know, we kind of touched above the 4-hour cloud, fell back below it, We're back below the 8-hour cloud, so we're really, I mean, it seems like it's seems like a lot of movement yesterday and the day before, but really we're kind of still stuck in this range trade here, and that's what we've got going on. 1 second. Oops. Okay. Now where was I? UJ. Ooh, ugly chart. But I'm actually kind of cool and happy with this because I want to get in longer. I basically got, for me guys, I've got a tranched entry plan for UJ. So I have entries that I've been sharing with you, basically where I'm cool with anything between 106 and 105. All right, really any 25, 50 to 100 point dip in a single hourly, 4-hour, 8-hour daily move, I'm going to be buying those dips. Does that mean you're in the loss for a little bit? Sure, but there is a lot of, as we wait, there is a lot of technical conditions showing a lot of strength coming forward into this pair here, into the dollar yen. Is the yen strong? Yeah, the yen is strong right now, but it won't be for very long. The only thing that would make me change my bias on the UJ, and this might sound a little scary, is if we can't hold above 103. Other than that, I'm still a good buyer here. All right. Now we're going to come back to this guy here because we may have a long entry coming into the day here. Taking another look at the pound dollar, looking at the hourly. That's an ugly pin here. For going along, that is a yucky yucky candlestick. So we should look at some lower prices. If I go to the daily, we can see that these fib levels are drawn. So from this swing low to this swing high, we went up to 0.786 on that retracement on that fib, and we've since started to reject that and fall back down. Okay. Now I was talking yesterday, when I look at the hourly, I mean, we're looking at a really significant example of a parabolic move. Okay, remember, parabolic moves are when you have an uptrend, which we have. Okay, I don't want that. When we have an uptrend, like so, a parabolic move means we have, within an uptrend, we have increasingly steeper rises. See that? That's a parabolic move. This will correct. Parabolic corrective moves are like one of the 100% certainties that you can find in the markets. Okay, the closest thing to a 100% certainty that you're going to find in any market is a correction off of a parabolic move. Okay, that's what we're really looking at in the pound dollar here. Well, as I'm talking, that dollar yen is really facing a lot of pressure down, which we're looking at a good support level showing up here, probably right where we are at actually. We could very easily get a double bottom off of this zone, so that could be pretty exciting. Gonna watch this. We'll come back to it. Now we're looking at the. I mean, it should be a strong support area because we've got this double zone here, and then we've got this historical activity here. In fact, if I put on the, where is my volume profile? Visible range, but I need to adjust this. Doot. I'd like to do 75 with the 33% value area. Okay, if I'm looking at it, let's go from that major swing up here to now. Let's use this entire zone. So here's the point of control is, did I turn that off? No? Oh, it's like right on this 382 fib line. So the point of control is above us. And you know, we're pretty extended away from it. So the behavior here is to snap back up to it. You know, we've got this is the daily chart. And so we're looking at a pretty far drive down, but we're entering this zone which has been a strong support area in the past. Okay? Now if we break, I'm not looking to actually re-enter any more longs. I'm going to hold on to the ones I've got, but I'm going to look for a test down towards this zone right here, probably looking at the 103.79. I would add many lots around here. That 786 is a pretty powerful retracement area. Okay, now let's go bring it back to the hourly. You know, we're catching a little bit of a support down in this area. If we look at the swings here, the activity, not a whole lot of volume participation down here right now, but there is a lot of it's catching a bid there. Quick back look at the pound dollar. Ugly candlestick there. We have 12 minutes left on the hour. We'll see how. Now, again, looking at the Ichimoku system, look at where price found support. Right on the baseline. Okay? Right on the base. It's always cool when you see that happen. Looking at our other pairs, the news. Actually, you know what? Let's wait. Let's take a look at cryptos quick. So in cryptos, what do we got going on here? Well, we traded down. We fell down below the conversion in the baseline, and we got into the kind of the upper zone of the 4-hour cloud. And where did we find resistance? Really at the 8-hour, up near the 8-hour cloud here. But where have we found support? Within the cloud, within the 1-hour cloud, we found support at the bottom of that. And so that's what we're kind of looking at. And also notice our oscillators. Similar structure. Okay. Even if we bring it back to here, there we are. You know, we're kind of in a wide open zone here within this square, so, you know, this is where we can really just trust the Ichimoku system to do its thing. Again, as we get closer to this zone, as closer we get to the 23rd, the more we should see a thrust up in price. Okay? Litecoin has caught a nice bid. You know, most of my current positions in cryptocurrencies, my largest positions are in Litecoin because I'm very bullish on this. Litecoin's the only one that really kind of has a lot of, you know, real world utility coming for it because of its debit card that was supposed to come out. Oh, I think early February maybe, but it didn't. Mid-February, late January. I don't remember. It was supposed to come out, you know, sometime beginning of this year, but then it didn't. So that was a little bearish for it, but you know, they're gonna eventually get it, the bugs worked out there, and they're gonna get it to do its thing and have it work. Oh, sorry, I just got a different chow. Now, going back to looking at Ethereum. Ethereum's the obvious laggard in the whole bunch here. Just a real drag of a currency right now. Take a peek at the dollar index quick. Dollar index in my square has found looks like it found a bit of a bottom. It's traded up, found support within this arc, tested again, found more support, and you know, we're looking at it so far. This is a thin cloud, so this is not a very strong indication of a move. So we have actual weakness in the resistance up here, so we should be aware of that. And then looking at the gold trade, Gold's looking a little, you know, it's looking like it's forming somewhat of a pennant. So keep our eyes on that. Euro pound caught a little bit of a bid here, and just kind of, or sorry, not euro pound, euro dollar. The EU dollar, euro dollar is just kind of floating in the middle here. I you know, don't really care how I draw it. I just want to see where the midpoint is because it looks like we're there. Yeah, we 50% retracements in here, so that's kind of where we got stopped there for a little bit. UJ, okay, now we are looking at 105.3 and going to see what we have for some activity on this drill. We might touch 105 today, but you know, be on the lookout for a snapback here because this is a fairly extended move down. I want us to take a look at the Hurst Cycles real quick. Where are we at? Hurst Cycles. There we go. And let's look at the you know what? Right. Yeah. So Hurst cycles are really nothing more than what we would do with Gann stuff. So, you know, I remember I talk a lot about Gann's big on these cycles and these moves and these like rhythms and patterns and beats that equities and futures and Forex, all those things, they exhibit their own kind of pulse. Well, that's what these lines up here. You know, why don't I just do a new chart, and we'll get rid of that. Okay. Now, just looking at this on the daily. All right. Observing this activity here. What we want to look at is, we'll do Hurst cycle. So we'll just do the troughs. Troughs mean the market bottoms, okay? Now, when we look at this here, okay, on the bottom, these diamonds paint when the market has actually formed a bottom. Okay, now notice that it doesn't mean it's like an all-time low or that it's a swing low. It just means that, well, technically it's a swing low. It just means that we've struck some low in the move, okay, and that had some buying afterwards. So, you know, what do these diamonds mean? Well, they are these lines here. These are the future lines. And if you can't see it really well on your screen, because I can't even read it really well on mine, I'm trying to figure out how to make these bigger, but I suppose I could make the font bigger. But anyways, so this is a daily chart. So the purple down here is 17 days. That means, like, in this time period, these this is telling me that there is, when the purple lines show up, that is generally a market bottom is found around that time. Okay, and then as I look at the next level above, that's a 35.9 days. Same thing. Above that, that's the 72 day, and then the green line is 20 weeks, and then the green line here green one's 20 weeks, and then we have 41 weeks, and then I believe this is like a 60 week, 65 week yellow one. And let's see, like, how is that look. So, you know, we found a bottom on the daily when price was confluent falling down, and we had this confluent zone of the 60, 40, 20 week, 72 day, 35.9, 36 day, and 18 day swings. And let me get an RSI on here. Okay. Now on the RSI, where we at an extended down level? You know, we weren't like really oversold here at all, but what we were at a you know, a divergence here. So that was a good key. And so now we're looking at the daily. You know, where's our next market bottom? Well, our next market bottom looks like, you know, our major swing low is going to happen on the 20, you know, between the, what is that, May 31st and, sorry, May 21st to June 1st is where we're looking at a big swing low. And we're not there right now. Okay, we're in an open space. So I want to know, well, okay, then we must be, you know, usually we'll have some type of swing high. So I need to add the other Hurst cycle on here. And now I'm looking for peaks, so I'm looking for highs. Okay, so right now that is where we're within this long cycle here, okay? That's telling us, that's giving us an early warning sign that, hey, we're in a cycle of where we are going to see higher prices. Traditionally, this is where we're going to have a larger swing. And we're going to find a market top somewhere in here. So where's the first place I want to look for a market high? Well, I'm looking for that around June 1st. Okay. And I'm also looking for it around here. July and, you know, the end of July, the beginning of August. Well, how do you quantify that with these values down here? Well, because we have the longer time frame up, okay, because we have the 60-week telling us that this is where we will find swing highs, because we are there, we have a higher probability of prices moving up than we do having them move further down. Okay? And so that's the kind of activity we're looking at. Now, it could play out that we would have further down pressure towards June 22nd. That is not a very probable scenario, just based on our Gann analysis and looking at our squares and all that jazz. We are looking more likely at a snap back to value up around, you know, the 110, 109 zone to get to these market high areas, okay? Now, we can also apply this to other cycles. Okay, well, let's do this. How do you plot these kind of cycles using TradingView? Okay, because Hurst cycles, when you draw them out using a using a cycle tool, excuse me, gotta drink some water. Okay, when we're plotting those out, they'll look like this, and you'll notice it on TradingView. So if we want to see the semicircles, that's what Hurst cycles will look like on a chart, okay? All right. So you go for, you know, you do long periods, and then you kind of work your way down. So this is actually very easy to do. It's kind of subjective, but just requires a little, you know, kind of work on the traders and the analyst part. And again, I'll say that this kind of stuff where it does it automatically is not as accurate or as important as your own, okay? I cannot stress that enough. That just because these paint automatically and it does some of the work does not mean it's more accurate than doing it yourself. It's not. You are going to see and notice things that the software can't, because like this software and painting these automatically, all it's really looking for is, you know, these bottoms to show up, okay? It's not accounting for things that we would know, that maybe one of these swings is not right, or maybe one of them is and it's not there. So we have to be very careful of using that kind of stuff. Now, I want to bring up TradingView again. And we'll get to some trades here in a second. I'm just waiting for everything to kind of move a little bit after that GU news, because we're probably going to, you know what, actually, I'm going to say we long and short two things here. And okay. Moving forward. Looking at, where am I at? Okay. Let's go ahead and, I told you I'm probably going to keep you a little longer than usual because I want to do this with you guys. Okay, yeah, let's use the euro as an example. Now, first thing I'm going to want to do is I'm going to go to a monthly, okay? And, you know, just kind of take a vertical line tool and, well, make it more clear than that. Mark down some of these low areas, these swing lows. You know, just kind of give yourself a guideline of where these swing lows are at, you know. And I'm not talking about just those kind of swing lows. You know, this would probably be one inside of there. We've got one there. You know, probably here, there, there. You know, just kind of something like this. All right. Now, in TradingView, there's a tool. Where's that? Okay, yeah, it's within the Gartley patterns and the Elliott patterns. Okay. Now here is where we're going to want to click on time cycles. Yes, that's the one. Okay. And we're going to come down to the bottom of the screen. And I want to find, you know, something like, I'm probably going to want to start on this swing here on the November 1st, 2011. And I'm going to draw these swings to where it looks like they are, you know, coinciding the most, okay? So then I want to adjust these. Okay, is that looking like we're at a swing low area? Yeah. Here, yeah. Some type of swing low there? Maybe not. Some type of swing low here? Yeah. That's a little, there's one there, one, you know, little off maybe. So on the monthlies, we're probably going to want to look at getting rid, you like only looking at the major swings that we get. Okay, so let me just, so we'll say there's a swing, we'll get rid of this one. Again, this requires a little bit of work. Swing. Yeah, that's looking like a swing low area. Do. Oops. And we can start over in a new area. So we could probably just start with our new swing lows in this pattern. Why? Because it looks pretty consistent. So this is kind of pretty accurate. We'll probably bring it out to a weekly and see. So this would be our longer term swing signal, okay? Now let's check out the weekly. Okay, so we've got our monthly sitting here. All right. It's looking pretty good. It doesn't have to be exact. We're just looking for an idea of where these zones are. Now I've got the weekly, and I'm looking for some further definition. Okay. So I'm going to, you know what? I want to take this. I don't want to do background in it. I just want to see those lines, and that'll be those are our week or our monthlies. Now I'm looking for a weekly. And for the weekly, you can use the same swings that we have already. Kind of try that. And we'll start there. Now, what do we got? Swing low area, swing low area, swing low area, swing low area. There's a swing low. There's a swing low. Not really, but a little bit afterwards. Swing low there. Not really. Not really. Okay, but there is enough of a pattern there for that. So then we have our weekly here, and we'll just color that blue. Okay. You know what? I really want to get it on those monthlies is what I'm looking for. But we do have a swing low there, swing low. Might have to widen these out actually. It's probably a little too tight for the weeklies. Actually, let's just screw the weeklies and let's go to the dailies for now. Daily. So on the daily, if I'm looking for some swing lows, I want to kind of plot those out. Swing low, swing low, swing low, swing low. Get these areas that seem like they really stick out. Okay. And I'm going to do the same thing. Looking to see if I can get any of these troughs to match up to that relative area. May have to adjust for identifying deeper swings here. Oops. Zoom in and see these. Let's see, what do we got? Swing low there. There. Yeah. Nope. 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 That's okay. That's okay. Cool. You can kind of see the process of this, and then you can go even lower to like check out the hourly. And on the hourly, you can do the same thing. So you widen these out, and you can tell that, do the lows all fall in the exact center of the trough? No, they do not. But it's giving you a heads up and a warning that, hey, This is happening. This is probably going to roll over and switch and look different here. Let's keep an eye on it. And if we look at the cycles here, let's go to the euro dollar. I mean, I think even on our own drawing that we just did, and I haven't actually checked this myself. So, you know, like on a 30-day, which is a 4-week or 30-day, what am I looking at on here? Oops. Yeah, I'm within those zones of where we would see a market bottom, a trough. Okay. Now, saying all of that, the point is to correlate your Hurst cycles that you have on the bottom with the ones you have on the top. Okay? And, you know, we're looking for a good indication of kind of a region where if price is up, you know, around here, let's say price is, well, actually, let's just look at it this way, where we're sitting at right now. If price is down here, and I know that I'm in the range of the longest time frame, the second longest and the third longest, if I know that you know, in front of me in time is a zone to that says we're going to be at some type of swing high, then that's you know where I'm looking at. That's where I'm looking at going long here. If I want to bring it down even to the hourly, you know, I look up above me. Look at this. We've got on the hourly, we've got the 42-week long period. We've got the 21-week, 80-day, 36-day, 18, 10-day, 5-day, 2-day, and I'm going to assume that this is the like 0.8 days. So here it's showing me on the hourly that this entire region in front, going towards the 26th, this is all a swing. Let me get rid of these circles here. This is all a swing high zone. This is all telling me that I have a high probability of having some type of swing high here versus going lower. All right? That is a powerful tool. Now, you're probably wondering on here right now, what are these lines called? Well, in Hurst Cycles, there's a fantastic book called Mastering Hurst Cycle Analysis. That's what it is. And I believe there is, I don't know if there's a free download of it or not, but the name of it is, that's from yesterday, that's for Bitcoin. Mastering Hurst Cycle Analysis. Okay? Mastering Hurst Cycle Analysis, that's the name of the book. It's by Christopher Grafton. Read this. Because I'm going to tell you right now, one of the secrets of forecasting prices is using the tools of the old market masters, the old fathers of technical analysis. Because Gann, and if you've been reading anything on Gann, then Hurst is going to make sense to you, because really Hurst is just kind of like a specialized part of Gann's theory of cycles. So where Gann's like really like precise and broad on a lot of things, Hurst kind of brings it down to a more modern approach. even though this is he wrote this stuff I think in the 70s. It's still really modern compared to Gann and Elliott and Gartley, those guys that you were all like in the very early part of the 20th century, late 19th, early 20th. So looking at Hurst Cycles as a Gannalist makes perfect sense. It's just very complementary. It's all conforms with Gann's theories. It's just how you should do it. Now, I don't think I've ever mentioned this before, and I think this might help tie things together, is that Gann and Hurst, but Gann will tell you when something will happen. Gann will tell you when a change in the market has the highest probability of happening. Okay? It doesn't tell you the price of how far it will go, but Gann will tell you when a change may happen. The only thing that can tell you how far it will go is Elliott waves. Of course, now that I did that, it totally blew apart my whole ooh moment. One second. Well, that doesn't help either. Dang it. Anyways, what I'm trying to make the point is that if Elliott was pointing up towards this direction, like, or let's just say it was pointing at 111. Let's say an Elliott cycle ended right here, and we know that this is an area where we would have some type of swing high. Gann and Hurst would tell us that this is where a change will happen because we're probably going to be traveling to a swing high. And then Elliott waves that you draw according to the percentages of Fibonacci's, if it's around this area, then you know a value zone of where something's going to go, and you know a time of where something's going to go. Okay? That's pretty powerful stuff. I mean, the interviews, magazines, and stuff written about Gann, he was probably the most accurate analyst in history so far, because he was able to precisely get his entries like to not only to the day but to the hour and the minutes. I don't know how he did it. Maybe it was easier for him because there wasn't all this activity like there is now, but for those of us who are retail traders who have access to technology that was reserved only for high-end funds up until, even 10 years ago, well, hell, even 5-6 years ago even, we have access to more powerful software and analysis than any generation before us. And this kind of stuff here that I'm talking about, the forecasting and using this stuff, is time tested, true, and works, and is able to help you find, an area to look at with an easy bias. Okay? Just kind of went on that little bit of a rant there. Anyways, that's kind of the behavior we're looking at. This is the zones and the areas we're looking at, and we can have using Hurst Cycles and Gann's analysis, we can have a very good idea of where something's going to happen. Anyways, that was kind of the educational component of the day, I guess. Stretching on for an hour here. Okay, bringing it back down. Let's take a peek at what we've currently got going on. So the dollar-yen pair, we have so we're below this 45, but we're very extended in the oscillator, so we should expect to start moving and trading above this line again and find support coming back in. So I already sent out a thing on a buy for the UJ and a sell on the pound. The pound is just structurally and technically, it's not in a healthy position at all. It's extremely, and in fact we just broke that first parabolic rise line that just got broken, so we should expect that to fall down even more. We're looking at, it's sitting on this, let me bring it out to the 8-hour. It's sitting on this new squares 45, so but because it's so accelerated, it's going to have difficulty finding support there. It's probably going to break down as well, and it'll fall down lower. So look for that. Just look for generally a strong pullback corrective move in a lot of these markets compared to yesterday. Okay. It's possible that we could get an extension lower or higher in the pound or in lower in the UJ, but throughout the day. But I mean, really, we're looking at some pretty extended moves that should face a lot of return to where we were in value prior to the move. So just be aware of that. Yeah. So really, again, not a whole lot of trades yesterday or today because of all this activity. I mean, we know where things are going to go. We know the probabilities of those biases playing out, and we should be excited about these moves. Just trades on the pound and the UJ right now. They're going to be a lot of activity in everything. So just be very careful about, how much your position. Like, okay, let's say this. Like, if my personal account has like $300,000 in it, I'm not going to risk even 1% of that to get a big gain. I'm probably going to risk a higher percent. I know that goes contrary to a lot of trading theory, but I'm not like a really contemporary kind of a guy. The only thing that I veer a little bit from tradition and contemporary is my risk management, where I tolerate a lot of risk. You may not tolerate a lot of risk. If you've only got like $1,000 account, and I'm talking about these long swing trades, you probably don't want to take a 10th lot. You don't like 10,000. You probably don't want to take 0.1 or 10,000, however it is you have to fill those. But you probably don't want to do that because you'll get over margined if you're a U.S. trader. You'll get margin called when things drop 200, 300 pips. So you might be comfortable just taking 2,500 or 0.025. I know that doesn't seem like a lot, but I tell you, if you're not used to seeing huge drawdowns on your account, and if that makes you nervous all the time, you need to trade small and get used to little drawdowns on your account that don't bother you, and then work yourself up, okay? All right. Anyways, that is my stuff for the day, and I hope you guys found some use out of it, and we will all visit again tomorrow morning, and we'll see how these markets are going by then. It'll be fun. All right, have a good one. Bye-bye.